Good morning, good afternoon, and good evening, ladies and gentlemen. On behalf of CLSA, I take pleasure in warmly welcoming you all to CLSA's virtual investor event titled From Crisis to Stability, Sri Lanka's Economic Restructuring Journey. I warmly welcome our esteemed panelist, Dr. Indrajit Kumaraswamy, former Governor of the Central Bank of Sri Lanka, Mr. Murtaza Jafarji, Chair of the Advokata Institute, and Mr. Gregory Smith, Lead Economist and Program Leader for Sri Lanka, Nepal, and Maldives at the World Bank. And today's panel discussion will be moderated by CLSA's Head of Research, Mr. Oshada Divasgunasekara. In terms of the format of the call, we will begin with a panel discussion followed by a Q&A session. During the Q&A session, you may use the raise hand option or the Q&A tab to direct your questions, and a gentle reminder to all participants to kindly mute themselves during the panel discussion. So without any further ado, let me hand over the proceedings to Oshada to take things forward. Over to you, Oshada.
Thanks, Guhan. Hi, everyone. Welcome to our webinar on basically discussing the road ahead for Sri Lanka in terms of economic recovery. So without further ado, I'll start off with the moderated session. And the first question I'll leave open to all three of our panelists. So the first question is, given the current geopolitical tensions in terms of Iran, Israel, and Palestine, oil prices being volatile and the dollar being strong, we have seen foreign institutional investors exiting emerging markets. How do you see this impacting the local economy in Sri Lanka? Maybe Mr. Jafarji, you could start.
Thank you, Oshada. So we haven't been getting a lot of international flows. So for the capital account or financial account, it's going to make much of an impact. On the external sector, the key concerns are more like second order effects. Most of our export companies are experiencing weak demand, perhaps starting with apparel because they had such a good period 2 years ago. Some of the other industries also are experiencing weak demand from the West. So there will be more second order effects. And then, of course, the tourism industry, that if there is a flare up in the Middle East, arrivals from that region and also across the continent could impact us. But thus far, the impact, because the domestic situation is significantly improving, helped by weather, the impact has been very minimal to Sri Lanka. The only other outlier is that oil prices have started increasing. We enjoyed prices at less than $80 a barrel. Now it's $90. And the distillate prices, petrol, diesel, kerosene, are all over $100. So you probably see price increases coming in the month of May, which will be greater than what we have gained from the currency appreciation.
Thanks, Mr. Jafarji, for your thoughts. Dr. Kumaraswamy, can I bring you in here?
Yeah, let me just change tack a little bit to complement what Murtaza said and talk a little bit about whether dollar strength is likely to continue and what are some of the risks associated with the oil price. And then very briefly talk about the impact on the local economy. Now, in terms of dollar strength, it seems very likely that it's going to persist. You know, there is talk now of US exceptionalism in terms of economic performance, and the rate cuts anticipated have gone down from 5 or 6 at the beginning of the year to 1 or 2. And this is at a time when the BOJ has already started easing for the first time since the global financial crisis. And the ECB and BOJ are likely to cut earlier and more often, given where they are in terms of the rate cycle and in terms of the performance of their respective economies. So all this, in addition to the safe haven flows, will play to the strength of the dollar. Now, in terms of the impact on the domestic economy, obviously a strong dollar adds to costs, in the rupee costs in terms of financing imports and also repaying debt. So some of the relief we get on the debt restructuring, if the dollar continues to be very strong, could get eroded. But right now, there's a positive impact because the dollar's strength is containing the appreciation of the LKR. Because clearly, at a time when we are trying to transform as quickly as possible to an export-led economy, we don't want the currency overvalued at this juncture. So the strong dollar is helping to contain that appreciation we have seen in recent weeks. So that's on the US dollar. In terms of oil, I think it was in the 70, 80 per barrel range for a while, and both producers and consumers seem to be happy with that. But I think in terms of where it's now gone up to $90 per barrel for the Brent crude, I think that's really reflecting the increased risks that are being seen as a result primarily of the conflict in the Middle East. I mean, I think Russia has managed to circumvent the sanctions. In fact, I see its economy has been upgraded in terms of growth. So that doesn't seem to be impacting on the market very much, the oil market very much. But clearly the Middle Eastern crisis is already having an impact. And here I think there are two scenarios. One is that the Americans are able to restrain the Israelis to a very careful and calibrated response, which if they do, hopefully it will have a relatively muted impact on the oil markets, and that the conflict can be contained and does not become a regional or even go beyond the region. Now, the other option, the kind of the worst case scenario, is if the Israelis, the Americans are not able, and the Europe and the G7, well, they seem to be working together. If they're not able to restrain the Israelis, and the Iranians then feel compelled to respond, the nuclear option is for the world economy is the effect, the oil flows coming through the Gulf of Hormuz being affected. If the Iranians decide to restrain or constrict the oil flow through the Gulf of the Straits of Hormuz, that is roughly, I think, if I'm not mistaken, about 30% of global oil flows, 70% of which comes to Asia, about 200 million barrels per day. Now, if that gets constrained, clearly there will be a spike in oil prices. So to summarize, I think if the conflict is contained due to American influence over the Israeli response, then I think probably prices may be higher than the $70 to $80 we've seen, but hopefully they will not spike in a way that is destructive of the whole global economy. Now, in terms of impact on the local economy of all these, the volatility and the kind of safe haven flows that we're seeing, I think one thing we have in our favor, which would mitigate against the kind of general thrust of the flow of institutional capital, our valuations are still extremely attractive. And on top of that, the risk premium attached to the economy is declining. So as the reform program progresses, if the review is completed successfully, which I think it will be, and if the debt restructuring is completed by June, as the authorities anticipate, then I think the risk premium will come down and to a significant extent, hopefully, mitigate some of the factors that are leading to this safe haven flow out of emerging markets. So we should be able, I think, to opportunistically attract some capital into this share market. Now, as for the G-SEX market, there again, I of course am very wary of flows into the G-SEX market because too much of that has been very destructive in the past because given its volatility. But we may also see some flows, though the differentials are getting compressed. Our interest rates in the G-SEC market are coming down and global yields are going up. So I don't know whether we'll get much by way of institutional flows into the G-SEC market. But I don't think we need to be too pessimistic on this, simply because I think we're coming off a very low base, particularly as far as the stock market is concerned. And that should play to our advantage. Final point I want to make is all this, given the volatility that is increasing in the global economy, and it's likely to persist for some time because of geopolitical tensions, which are not likely to abate very quickly. I think this puts an even higher premium on the need for very sound macroeconomic policies to build up our buffers in the economy. Reserves, external reserves, fiscal buffers, all those need to be built up all the time by pursuing very, very sound macroeconomic policies. And we need to accelerate and persist with the structural reforms to build up the resilience of the economy. Because the world is becoming an increasingly uncertain place, and we need to build up buffers and we need to build up resilience. Thank you.
Thanks, Dr. Kumaraswamy. Mr. Smith, can I bring you in here to give your views on the global issues impacting Sri Lanka?
Yeah, sure. There's always a geopolitical event you need to manage as an emerging market investor. And from Russia's invasion of Ukraine through to the recent conflicts in the Middle East, there's a lot of volatility in oil prices. But I think the other thing to remember is, there's so much going on in Sri Lanka. We forget sometimes that we're coming to the end of the US hiking cycle. So global interest rates, they were complacent about inflation when emerging markets were increasing rates. So the Fed was late to the party, as were other advanced economy banks. So they had to hike aggressively starting in April 2022. And that was the biggest impact on emerging market flows. And that's what led to the major outflows. And you add to that some difficulties in the Chinese economy. And I don't think it's a question of money exiting EM, but money just hasn't come back yet from the start of that hiking cycle. And we sort of came into 2024 and the market was really pricing in some quite quick and large rate cuts, which with the data prints we've seen in the first 16 weeks of this year, it's looking like some of those hikes won't come as quickly as the market expected only a couple of months ago, and they won't come to the same extent. So we're sort of going to live perhaps in an environment of slightly higher rates. And I think to me that's as important as the geopolitical tensions and the oil prices. And the other thing about EM these days is the structure of its change. There's a lot more oil exporters in the EM bond index, countries like Saudi Arabia, Qatar, Kuwait, UAE that benefit. So, in some ways it's terrific for oil importers like Sri Lanka, but this money ends up in the fiscal accounts of these large oil exporters, which then will engage in more foreign direct investment. And Egypt's a country, for example, that's been in quite large debt troubles recently, but partly due to the geopolitics and partly due to the Gulf having petrodollars. Some very, very large FDIs have come in and really helped stabilize that economy. So you see the money move through the system in different ways. But at least for me, the timing at which the US Treasury might start, the US Federal Reserve might start cutting rates is the most crucial thing.
Thanks, Mr. Smith. If I may keep the discussion with you, you had your latest update and economic forecast for Sri Lanka out a few weeks back. Could you give us some perspective on your thoughts on Sri Lanka's prospects in the next few years?
So we put out a report about 2-3 weeks ago, and it's certainly, it's recognizing the recent stability hard won by the good policies that government's engaged in over the last 18 months. And, we've seen 2 positive, decent quarters of growth. We've seen inflation back towards target. We've seen the first current account surplus in decades. We've seen some signs of positive credit growth. We've seen some signs that the economy is improving. So I think that's a green shoot, but it's not yet a recovery that's putting money in people's pockets. So things are incredibly tight still for the majority of the population here. And while we're seeing a shift away from recession, we're only forecasting growth of 2.2% this year, 2.5% next year. And partly that is because the government's got to keep incredibly tight fiscal books, running large primary surpluses to try and get debt down further, because the restructuring is not going to do enough. As it was, the debt stock is still going to be huge, and the cost of servicing debt is still going to be huge even after these restructurings are complete. And so the sort of the path at the moment is these large primary surplus, which in turn do their bit to subdue the economy. So what's really needed is reform for growth. And that's the hard part. And the government's done incredibly well at passing, revising laws and legislation, but there's a whole load of steps that are needed to switch this legislation into to implement this legislation, get regulations out, and get this economy moving. So our sort of conservative baseline suggests this is going to be tricky, but there's certainly upside of growth of 3-4% if this reform process can continue through the electoral period and into 2025. So I with the currency move, I don't see a big upside for exports. For me, the hardest part about medium-term forecasts is pinning down where we go on imports in terms of people's confidence in the economy coming back, continuing with sort of the business expansions that they might have put off during the crisis, etc., which we think will sort of shift the trade balance and the current account back into deficit, at least by 2025.
Thanks, Mr. Smith. Moving on to kind of the fiscal side of things, Mr. Jaffery, if I may ask, things have definitely improved in terms of the primary balance. Individuals have been hit the worst in terms of taxes so far. I think we are expecting property taxes to come in from the next budget. Do you think there can be some level of easing for individuals, which can kind of start to bolster growth and the consumer sector as well from a market perspective? Mr. Jaffery,
Sorry. Yeah. Before I answer that, let me give you some context, right? There was an estimate that top 1% of families own 40% of the wealth. So if they are going to impose a property tax, basically the burden is going to be on that 1%. And people are a bit apprehensive about property taxes, but the reality is we already have property taxes in Sri Lanka. That is through the rates and taxes assessment of the municipality. We've had that for over 100 years. The issue is that assessment value is very, very low. And property is the land is a devolved subject in our constitution. So whatever will be raised through those taxes will go towards local government. And how the fiscal will benefit from it is that the transfers that they make to local government or the provinces will reduce, because they will be able to raise more revenues. And it is the right kind of thing to do, because there are three things that you can tax: tax what you earn, tax what you buy, and tax what you own. And this is a progressive taxation, because it will exempt certain things. I don't know the exact architecture. Now, your question is that whether there is any relief that can be given. I kind of disagree, because top 20% of households control 51% of income. So most of these taxes the burden should be on these top 20% of households, because they have the income. So either through direct taxes or indirect taxes. On direct taxes, if you take personal income, the taxes raised through personal income are less than 1%. I mean, the target is to get to 1% of GDP. It's a lot less than that. So you basically, whether you can have an elasticity effect if you cut income taxes. Of course, there is a group in that middle management group who suddenly have seen the effective tax rates going up like from 5-10% to about 20%, 25%. That segment is definitely impacted with a higher tax burden. And if some kind of relief is being given, then that segment can perhaps start spending. But the overall, the tax collection is excessively skewed towards the high income. And I don't think that group is going to be excessively elastic to any tax reductions that your consumption can go up. So improvement has not to come through a tax stimulus. It has to come through an improvement in expectations and improvement in income. And on that basis, the weather event that we had last year, which was called the Indian Ocean Dipole, which gave us enormous amount of rain and then very good sunshine in the first quarter. We are going to have a very good harvest. I hazard a guess, a record harvest. We've had very good tourism flows. So that whole tourism belt has got stimulated. And you are going to see a demand pickup coming from higher incomes rather than any kind of fiscal incentive. So in answering your question, I don't think there is room for any kind of fiscal incentive on the tax side. You already gotten a stimulus because Oshade, from this month, the 1.1 million or 1.2 million public servants are going to get 10,000 rupees more in their pocket. From January to March, they got 5,000. Now this month is going 10,000. So those multipliers and second order effects are going to kick in and further improve economic activity.
Thanks, Mr. Jaffarji, for your thoughts there. Next question, again, I'll leave it open to all three panelists. It's mainly on the external debt restructuring. We got an update yesterday about some delays happening there. Could you give some color on the recent developments? The bondholders seem to be pushing towards macro-linked and governance-linked bonds. So maybe if you could give some perspective on the possible implications in going ahead with these kind of instruments, I think that would be helpful. Dr. Kumaraswamy, would you like to start?
Unmute.
Dr. Kumaraswamy, you're on mute.
Okay, I'm sorry about that. Let me say at the outset, in terms of full disclosure, that though I continue to be on the advisory committee along with Professor Devarajan and Dr. Kure on matters related to the private external creditor negotiations, I've recused myself because I'm on the board of Linear Wealth Management. Having said that, let me up front say it's very important not to become pessimistic about the news flow that has come out the last couple of days about the external debt restructuring, because if you unpack it carefully, I don't think there are grounds to be very pessimistic about it. It is certainly a little road bump, but I don't think it is a barrier. And the protagonists are expected to meet again before the end of the year, and I hope they will be able to sort this thing out. And the chief of staff to the president in his press conference said that they are still confident that they can complete the process in June. So that, let me start with that, and also give you an update. I think we need to build this story up because it is a positive story. The DDO is completed. I mean, there have been some controversy, but the fact is that it's done and dusted. The official creditor negotiations have come to a point where there is an agreement in principle, both with the official creditor committee and the Exim Bank of China. So now the MOUs are being worked on. It's unlikely that the official creditors would put pen to paper until they know the structure of the private restructuring, private external creditor restructuring, because they would want to be sure that there is appropriate compatibility. You will recall that in Zambia, they in fact reopened the whole thing because they felt that there wasn't such appropriate compatibility. So though it may take time till the private creditor negotiations are completed for them to actually sign the MOUs, I understand, are being prepared. So that's also, I think, basically a tick in that box. In terms of the private creditor negotiations, now, I think there are some positive things. One is there were 4 points of contention identified according to the stuff that's come into the public domain. Now, those 4 points of contention, none of them are related to the core of the restructuring package. There is nothing in terms of maturity extension. There is nothing in terms of coupon reduction. There is nothing in terms of the haircut, which have been identified as areas of contention. So I'm assuming that there was no problem in terms of the basic structure that the government has put forward in its proposal. The second thing is that the IMF has stated that the government proposal is actually in alignment with its DSA. So that is another plus. Whereas it wasn't able to give the same assurance as far as the creditor proposal was concerned. The third thing to say is that if you look at the 4 points of contention, the reporting on those indicated that on 2 of them, there had been some meeting of minds. So now, if you look at the 4 points of contestation, one was whether the baseline, what baseline should be used, whether it should be the IMF program or what the private creditors themselves have put forward. And on that, the indication is there was some movement through the negotiations that took place about a week ago. And then the second point of contention, that was that, and this is related to the first, that the baseline should be more aligned with the IMF program. So on those 2 points, I think there was movement according to the reporting. The third and fourth points of contention, one was that the test for triggering the upward or downward adjustment in the macro-linked bond, that test was not agreed upon. There seems to be disagreement on what the test should be and how it should be applied. Then the second point of contention and the fourth overall point is the distribution of the benefits of the added value in an upward adjustment scenario, i.e., if Sri Lanka outperformed the GDP projections in the program and satisfied the upward adjustment test, how would the benefits be shared? So the last 2 points, that is the test for triggering the adjustment in the MLB, and how, if Sri Lanka outperforms, how will the benefits be shared? So those are the things that need to be worked upon. And hopefully those things can be resolved fairly quickly. Then another issue that people are concerned about is does this outcome in any way delay or derail the IMF Executive Board approving the second review and disbursing the next tranche? My understanding is that the condition attached to this particular review is that there should be demonstration of progress and continuing negotiation in good faith. Now, I feel that those conditions have been met, right? So we've had an engagement. They're going to meet again. And so as far as I read the situation, I think we have already satisfied the condition that has to be met related to the debt restructuring as far as the Executive Board consideration of the report on the second review, EFF second review. But of course, if there is some problem in terms, if there's a breakdown in the negotiations, things could change. But as things are progressing now, I don't think that it should hold up the Executive Board approving the staff level agreement and disbursing the money. And I think the expectation is it might happen. This also might happen in June. The final thing is, there is to keep one's eye on is what is happening to the CDB restructuring. Because, CDB will not negotiate with the bondholder committee. It will negotiate on its own, and it is negotiating on its own. And my understanding is that there are regular contacts between the Sri Lankan authorities and the CDB. And here I think it's useful to think back to what happened in the bilateral creditor negotiations. As you know, the official creditor committee, which is the Paris Club plus India plus other official creditors other than China, negotiated together. and the Exim Bank of China negotiated on its own. And there were parallel negotiations. And in fact, Exim Bank came to an agreement, to a conclusion before the official creditor committee. And of course, there has to be compatibility between the two outcomes, and there was compatibility. In fact, I think the Exim Bank proposal was slightly better. So as far as China is concerned and CDB, I expect that the process would be similar. There is no reason to think that it would be different. And also the reporting that came out of the Prime Minister's visit to China recently, that the Chinese seem to be very positive in terms of supporting supporting Sri Lanka, including in terms of Sri Lanka achieve that sustainability. So that is what I could share with you in terms of what I know. As I said, I've recused myself from the latest negotiations, but I know I've seen some very pessimistic sounding reporting coming out already, and I don't think that is justified. Thank you.
Thanks, Dr. Kumaraswamy, for your views. Mr. Jafferji, can I bring you in here? What are your thoughts on this?
So let me just step back a little bit to give some context to what Indrajit said. We have $35.5 billion of external debt, 10.8 each to bilaterals and multilaterals. We are left with 14.2 billion, which are commercial creditors, of which the ISBs, the principal is 12.5. And China Development Bank is owed 2.2. So what came out yesterday was about the 12.5 billion of the ISBs. There is accrued coupons of 1.7 billion until the end of 31st December, which I think is close to 2 billion in mid-February. So we are putting forward a proposal basically to take the arreared interest, which after 31st December is 1.7 billion, and paying it through 5 bonds, 1 bond, but with 5 cash flows and 3% coupon going up to 2028. Then we are saying that we will pay another 6 Series A bonds, 6 or 7, I forget, which we will pay in the time period 2028 to 2032 or 33. And then something called a Series B bond, which will have some macro link features. And how it works is that initially it's a like 4% coupon, then it goes up to 6, and then finally in the 2030s, it goes up to 9%. If you look at how much we are saying in nominal terms, we are going to pay back in terms of principal, we are saying 10.1 billion. The creditors have put forward a proposal where they say the nominal principal payments should be 10.7 billion. So what we are saying is the interest in arrears to take a haircut of 20%. On the principal payment, take a haircut of 30%. And we are obviously recommending lower coupon rates. The creditors are coming with their proposal and saying that they don't want to take a haircut on interest arrears, that they will take a 28% haircut on the principal. Of course, they want a higher coupon payment, and that's for the base case. If things record better than IMF's base case, they want a higher recovery. If it is worse, then they will settle for a bigger haircut. So I wasn't able to do an NPV analysis. But if you look at the difference, it seems like it is not insurmountable. So in the negotiation, in the next round, they will have to come closer and closer. The only novel feature is that they have recommended this governance-linked instrument. They have recommended a series of bonds. There are 2 plain vanilla bonds in 2034 and 2035. And after 2028, where the coupon will be 6%, they have said that if Sri Lanka adheres to 2 criteria, one a quantitative criteria, which means if we get our tax to GDP up to 14%, and a qualitative criteria, which has 2 elements. One is that we disclose the tax expense on all tax holidays based on each company. And we also disclose all public procurements above the value of 1 billion rupees, that they will give us a 0.5% discount on those two bonds, which are expiring in 2034 and 35. So the coupon on that is 6%. Each of these bonds, the principal value is 800 million. So do the sums in 2028 onwards. If we adhere to those criteria, we will get a 0.5% discount on $1.6 billion for so many years till 2034 and 35 that it expires, which works out to about $8 million a year. And I would like to put that in context that this year alone, I estimate the interest expense is 2.8 trillion. So based on 300 rupees on $8 million, that will come to about, it will come to about 2.4 billion rupees, which is less than 0.1% of our total interest expense this year. I don't know what it will be in 2028. So it's an interesting feature, but I'm afraid that it is not sufficiently enough to incentivize government to change behavior.
Thanks, Mr. Jafferji. Mr. Smith, would you like to give your perspective as well?
Yeah, certainly. So when I look at this, when I step back and look at this external restructuring, it's interesting on a couple of counts. One, Sri Lanka is a first-time defaulter. It hasn't got the experience of doing this like countries like Argentina and Ecuador. And that's essentially a good thing, not having the experience because you haven't defaulted in the past. But it does mean there's a lot to learn, both for the individuals negotiating and for the wider public that are following it. And the other thing is that we've seen the debt landscape change massively over the last 10 years. And what we've seen is, China scaled up its borrowing massively through the Belt and Road Initiative. And Sri Lanka and Zambia are two of the first countries where a large amount of Chinese debt is being restructured alongside other creditors. So there's been Zambia has been stuck trying to fix its debt restructuring since the latter part of 2020. So when we look at timing, it's a bit better in Sri Lanka. But the key things, the points I want to make is that the architecture for international restructuring needs to be improved. Everyone sees it as messy. So it's a difficult thing to navigate. And, in this instance, the IMF is the umpire. So think of it like a cricket match. And the umpire is basically is policing the game. It's put the rope out. So where the rope is where you get a 4 or 6. And that's what the IMF have done. And they've set this boundary so that it creates breathing space for a few years so that Sri Lanka can grow again, get back on its feet and get this economy moving. It was never going to be a restructuring that reduced the debt stock by a large amount. It was much more about gross financing needs. So we played to those rules. And as has been said, the clock started ticking when, to some extent, when Sri Lanka stopped servicing its debt. But really, there's a sequencing thing going on at the moment, whereby the official sector agrees first, then the commercial sector agree, and then if it's good enough, ink's put to paper. So if we think about this, going back to October, when we really knew the official sector was serious about pinning down an agreement led by China Exim Bank, and then followed by the Official Creditor Committee. So we're really in month 6 from then. In some ways it could have been faster, but in many other ways it's not that slow in an international context. And for me, once the negotiations, people start signing non-disclosure agreements and they go behind closed doors, that's a real positive sign. I think when PowerPoints are going back and forward with no real change over the weeks and months, that's not really a negotiation. This is real negotiation. So yes, it's a bit disappointing for the headline to say we did not conclude, but I think that all the right people were sat in the room getting closer to an agreement the IMF and the official creditors can validate is a real positive step. So I've sort of, over the last month or so, I've been positive. And yes, feels like it's taken a long time, but in an international context, it's actually not that slow. And one other point I'll make this week is one of the reasons things have taken so long from default to resolution of a debt restructuring is partly getting the IMF program signed. And that in part has been to do with a lending into arrears policy. And that for bilateral creditors, there's been a lot of effort this week in the DC meetings to resolve that. So people are thinking and working on this thing. The bad luck position for Sri Lanka is you defaulted early in this series. So a lot of other countries are going to benefit from what we learned from this restructuring. But at the same time, Zambia has ambled along now for so many years. So Sri Lanka's doing fairly well. And I think the tone of the press statement suggests that I think there's a really good chance of an agreement in the coming weeks and months.
Thanks, Mr. Smith, for your perspective on that. Let me now move on to some of the other reforms that are happening as part of the IMF program. Mr. Jafferty, since you are part of the SOE restructurings, could you give us some color on the progress of these divestments and the importance of these reforms being done? I think there's been a few roadblocks in terms of some court cases being filed for some of the SOEs that are being divested. And also, can you touch a bit on the electricity sector reforms, which I think are making progress?
Okay, so I'll go in reverse order first. Why should these SOE divestitures be done? I mean, there are three principal reasons. One is it is not the role of government to be in business. I mean, it's often said that. Think about as a soccer game, you can be the umpire, the referee, the rule setter, and a player. That the playing should be left to the private sector, and the umpiring and the rule setting should be set to the government. So the government should be the regulator and the policy maker, and the operator, the market operator, should be private sector. And the way out for Sri Lanka is to move more and more towards the market system. The second reason is when government is in business, and it should not be in business, and it should only be for strategic reasons, for national security, if there's market failure. There is a problem with what is called regulatory neutrality. And there are 4 types of neutrality: on taxation, on regulation, on procurement, on financing. And when I was part of a World Bank study in 2018-19 on SOEs, one of the chapters was on regulatory neutrality, which is something that I had to do. I came across a lot of examples, like, for example, in insurance, there was a directive that the life company and the general company be separated. SLIC never followed the regulation. There were procurements that at one time there was a circular that all government business to hotels should be given to government-owned hotels. So that distorts the whole playing field. And the third reason is a stewardship, that government has been a very poor steward of these commercial assets. A bankrupt government doesn't have capital to invest to grow these businesses because it will try to take out capital or dividend. It doesn't have the flexibility to offer the kind of private sector incentives. They're restricted by government dictates. So you can't necessarily pay for performance. You can't retain talent. It's difficult. And third factor is there are huge governance issues, the gravy train, corruption, misallocation of resources, mixing up commercial and non-commercial obligations. So that is the case why government should not be owning these assets. So cabinet took a decision to divest these assets. In the case of the court cases, unfortunately, in our system, there is nothing preventing a person from going to court. So there is nothing that you can do. I mean, if you take these 2 court cases that have been filed, one on Lanka Hospitals and Sri Lanka Telecom, the nature of it is pure nuisance. And this is about the 3rd time they're filing. On 2 times they misfiled. They had the wrong respondents. They didn't have a power of attorney. I mean, there's a bunch of amateurs operating here, basically. So they're going and refiling, and finally it is up to the Attorney General to get these cases dismissed. But there's nothing we can do to prevent them from filing. So it will just, unfortunately, it's more nuisance value. It will delay the process. Then comes the progress. So I started working on this in October 2022. We are now April 2024, and sad to say that we haven't got a transaction done. But the reality is that you have to be very careful about government procedures, because remember, Oshide, in 2008, maybe you were not working at that time, they reversed cases. We had privatizations in 2003-4. The court reversed it, and the reason they reversed it said that you didn't follow due process. So we have to be very careful with due processes. And I'm just one committee member, but I am operating at the frontier of my incompetence. And invariably, we haven't thought through everything. So when you have to change something, back again, you go to cabinet. Just to give you an example, like we have quite a number of cabinet papers that need to be approved. There is no cabinet meeting this week. Even next week, normally Monday, the cabinet meets. There's no cabinet meeting because Tuesday is POYA and the next cabinet meeting is on Wednesday. And large number of papers, so you have to get it in. Like sometimes cabinet meetings have like 100 papers in them. So you got to get those approvals. And we have also had some setbacks and we had to change course. But I'm hoping that come May, June, July, many of these transactions will start getting done because we are in that level of progress, barring any unfortunate thing. As far as the electricity reform is concerned, I believe the bill has been represented and there has been significant changes to it than the initial draft. So this is now a movement in the right direction. The initial draft basically gave a lot of power back to the minister because the original plan was to create independent regulators, PUCSL. So to be honest, I haven't read the most recent draft that it is very important that the regulator be given the power to regulate the market and the minister focuses on policy making. They don't go and get involved in regulation. The thing that I like about the Electricity Act is they're going to unbundle the sector and allow more competition in. So, for example, the transmission company will allow me as an independent operator to generate electricity and sell it to you if you were a consumer. There's a technical term for that, wheeling. And they are trying to bring more market forces into the whole electricity market. For the benefit of your viewers, we are about a 28 trillion economy. The electricity sector revenues are 600 to 700 billion. It's about 3% of GDP, 2.5 to 3%. It's a sizable sector. And since it's a crucial input to many things, it is essential that we have stability and we have competition because our prices are very high. So it is again a move in the right direction, but I hope that the deficiencies that were there in the original bill have been rectified.
Thanks, Mr. Jafferji. I think you gave some valuable insights on the SOE restructuring. Just a quick reminder to our participants on the call before going ahead with the last few questions on the moderated session. You can now start to send in your questions on the Q&A tab on your screen, and we'll start taking them up once we start the Q&A session. Getting back to the moderated session, Mr. Smith, if I can bring you here in quickly. I think you touched on some of the risks and opportunities that lie ahead for Sri Lanka in your opening remarks. Could you just quickly elaborate a bit on some of the opportunities that lie ahead over the next few years in your perspective for Sri Lanka to put things right in terms of a sustainable recovery path?
I'll do my best very quickly. For 15 years to 2017, the economy grew at average of 6%, but at the same time, the country took a lot of debt on during that period. And then we've been through a really sort of, we're just coming out of a really tough 5-year period of slow growth and 3 years of deep recession, with a bit of a bounce in 2021 after the worst part of the pandemic. And what I think's needed is, just by just avoiding a crisis and not making policy blunders, I think we get back to growth of 1 or 2%. And then really what it's about, it's, the opportunities there are to get some of these reforms going in SOEs, in investment policy, attract foreign direct investment, attract some of the skilled Sri Lankans that are going abroad to stay and utilize their skills within the country. And there's a huge amount going on in the region. You know, India is growing incredibly quickly. In the over the same 5-year period where the Sri Lanka economy has basically not grown, the Indian economy has gone from about 3.4 trillion to $4 trillion. So it's grown 12 Sri Lankas over this period where we've been sat still here. And this is a massive opportunity. And there's questions exactly about the GDP numbers, but I think this is a huge opportunity to be part of this regional growth as a passenger, whether it's from Bangladesh or India to, you know, in transshipment, in offshore finance for Mumbai, in the tourism sectors, in many different exports. And I think there's a huge role of being, you know, Sri Lanka's location is incredible. And these opportunities are there with the right reforms, you know, with the reliable electricity, a reduction in red tape, and a shift to actually encouraging investment. I think 4% growth is there for the taking for the country, given where the regional dynamics. And then there's another wonderful step where the country gets creative in terms of what it builds, but also what it destroys. And I think there's, you know, some creative destruction in letting some of those large drains on the economy stop, so that money can be freed up and be put into social services for improving people's skills and health, or into the infrastructure that will help enable a vibrant private sector. And I think, you know, one of the shocking statistics here is how low entrepreneurship is. So if you can find a way to get these reforms to boost entrepreneurship, I think that Sri Lanka entering into global supply chains suddenly puts you on a growth path of 5-6% and much more exciting. So I see huge upside from what's quite a conservative baseline for this country in terms of growth. But it does require that these reforms continue over the next couple of years and bear fruits.
Thanks, Mr. Smith. Coming back to Mr. Jafferji, in terms of a foreign investor's perspective, I think Sri Lanka's debt levels, even after the debt restructuring, will be too high for comfort. The IMF projections, I think, may be conservative, but the government debt to GDP will still remain one of the highest among sovereigns that have gone through an economic crisis in the recent past. Sri Lanka's track record with IMF programs also has not been good when you look at the past IMF programs that we've been in. What would you say is different this time around, if at all, in Sri Lanka, especially with elections now coming up?
So what is different, probably on my life experience, is the nature of the crisis was more severe than anything that we have had before. Second thing is that we have to now pay taxes. So Professor Mick Moore, who knows Sri Lanka well, I paraphrase a comment he made. He says, in societies that pay higher taxes experience better governance. And we need a more activist civil society and activist electorate who kind of hold how this country is governed to a much higher standard. So let me take a step back and explain to your audience what we are up against. Everybody knows about the 128% of GDP that we had the debt. Now, even if you do the debt restructuring, you are getting a very limited amount of relief. I mean, the IMF's own forecast is by 2032, the debt to GDP will be 95%. But let me give you a number, what we are experiencing now. Our domestic debt is 17 trillion. The treasury bill and bond stock comes to about 16.4 trillion. The interest rates still on the bond market are still hovering at 12%. The bills are going at 10% on average, because we still have bonds that we have issued at 28% that was never reprofiled. The average rupee interest rate is 12 to 13%. So 12% on 17 trillion, you'll get over 2 trillion. And if you take a foreign debt, you may be having about 700-800 billion course, at the moment we have defaulted, we are not paying, but it is accruing. So the target for this year is a tax revenue of about 4.2 trillion, of which the interest bill is 2.8 trillion. Such enormous amount of resources are going into servicing the debt. Now, the only way out, unless we do another domestic debt restructuring, is we have to grow the economy. And in order for us to grow the economy, this 3% business is not going to work. We will have to grow at more than 5%, considering that we have contracted by about 12% from where we came from. So in order for us to grow, we need luck, which we got last year with the rains. Second thing is that we hope that there won't be an excessive global deterioration. But fundamentally, we have to grow our economy through productivity. So productivity was not the basis, or total factor productivity, which is the conversion of inputs to outputs, both labor and capital, was not the mode how we grew Sri Lanka in the last 10 to 15 years. The post-conflict growth was based on what is called factor accumulation. We employed a lot of people, we borrowed overseas, we invested a lot, the debt accumulated. Now, going forward, if we are going to achieve these primary balances and grow the economy faster than the rate at which the debt is growing, at the moment the debt is growing faster than the economy, you need to have massive growth. And growth will only come through productivity, and productivity requires competition. So I have said this many times, that the tragedy of Sri Lanka is it is run for the benefit of 1,000 people. And these 1,000 people are not business people at various stratas of society, at various power centers. So unless the political change changes the fundamental nature of our state, that it be run for the benefit of our people, that we live up to our true sense of a democratic socialist republic. Democracy is people voting, and a republic is by law. So you have to join the two. If not, you will have a tyranny of demagogues or a tyranny of oligarchs. So this is the fundamental political change that has to happen in this country, where basically it is run for the benefit of the 22 million people, which means that all sectors, as far as economy is concerned, are open for competition. We open to trade. We make investment a lot easier. I know that there is a groundbreaking omnibus investment law that is coming in. I was part of a small committee that came up with this productivity commission, which is based on what Australia has. I believe there's going to be a new industrial zone law, new BOI law, trade. So we have to run this economy in a very different way and embrace market principles. If we successfully do that, I think then over the next decade, we can grow at 4 and 5%, because we have a lot of catch-up growth. For the next decade, we can easily grow at more than 5% because we are so far behind, basically, by implementing things we have been trying to implement for the last 20 years. We've been talking and talking. If we do it, then we will get out of this mess. If we don't do it and we go back to our old ways, I'm afraid we are going to default again. And maybe after the second default, we will basically mend our ways.
Thanks, Mr. Jaffarji. Coming to the last question in the moderated session, Dr. Kumaraswamy, could you give some perspective on the banking sector? I think there's a few questions coming up on the Q&A also on the banking sector. So if you could touch on your views on the private sector credit growth and the deferment in parate executions for the banks, whether the deferment until the end of this year is sufficient, or if it is extended, how much of an impact there will be on the banking sector.
Yeah, okay, thank you, Ashidi. May I, with your permission, before I answer that question, just add a very small postscript to what Murtaza has just said. And that is to try to address the question, what is different this time in terms of the reform? And I think there's one. Can I do that? Thank you. I think there is one very important difference. Those of you who heard me speak before are probably sick to the teeth with me bleating on all the time about macroeconomic distress and how poor macroeconomic policy has brought us into repeated crises, etc. Right? You heard that story. Now, this time around, we are setting out very clear frameworks for macroeconomic policy making, and not only setting out clear frameworks for macroeconomic policy making, but also embedding them in law. Now, the laws can be changed, I know, but at least you can't have a total policy reversal just by a letter from the ministry or from the presidential secretariat or whatever, which is what has happened in the past. I mean, we've had dramatic policy reversals, not just policy slippage, but dramatic policy reversals. We had revenue enhancement-based fiscal consolidation from 2015 to 19, and we take revenue up to about 14.5%, and then we have a complete reversal and cut taxes and take revenue down to 8%. We've almost got a central bank act through, which embedded flexible inflation targeting as the regime for monetary policy making, and it is thrown away, and now it is brought back. So, this kind of absolute volatility in macroeconomic policy making, as I've said many times, is what has been in my view, the main cause of our lack of progress as far as development is concerned. Now, this time, so the key thing is we've got these frameworks, which we've known about, but for the first time, they're being embedded in law. First, the fiscal side in the Public Finance Management Bill, and we've already have the Central Bank Act. So hopefully the Public Finance Management Bill, which is a prior action for the IMF review, hopefully it'll be completed shortly. So we will have both these in place. And I think they should make a very big difference because they do tie the hands of our policymakers in a way that's never been done before. So let's see what happens. I hope things will be better, and I think there's a good chance it will be. Right. On Parate, in particular, and private sector credit growth. Now, what is heartening is that private sector credit growth, I think, turned positive a couple of months ago. And last month it increased. So that's positive. And it also fits in with the narrative, I think Greg and even Murtaza mentioned earlier. We've seen the economy move from 6 quarters of contraction now to 3 quarters of growth. So all that fits in nicely, and we seem to be going in the right direction as far as both private sector credit and growth is concerned. Now, this Parate, suspension of Parate execution is a headwind, which is a completely self-inflicted and unjustified headwind that has been thrown into this process. I haven't talked to anybody in the central bank, but I would be extremely surprised if anybody in the central bank thinks this is a good idea. Why do I say it is such a bad idea? It will immediately compel banks to reduce their risk appetite. They will attach a higher risk premium to their lending, so the cost of credit will go up, cost of lending will go up. In addition, by reducing the risk appetite, the availability of credit will also go down. So both the availability and the cost of credit will go up because of this. So it is a singularly bad move. Thank you.
Thanks, Dr. Kumaraswamy. So with that, we come to the end of the moderated session.
I'm sorry, but may I just say one thing? And of course, the people who'll be most affected are the SMEs, right? This suspension of Parate execution will affect the SMEs who have been most affected by the crisis. Thank you. Sorry.
Thanks, Dr. Kumaraswamy. So we'll start off with the Q&A session. We have quite a number of questions which have come in. And to all the participants on the call, if you do have any questions and you would like to ask them directly from our panelists, please feel free to raise your hand and I'll let you unmute yourself and ask the question as well. So until then, starting off with a couple of questions on taxes, I think Mr. Jafferji, you might be able to take these up. The first one is, why should we be looking at a property tax instead of maybe not increasing withholding taxes? And the other one being, will the removal of para tariffs actually happen?
Sorry. So the basic principle, as I said, is you can tax things three ways: tax what you own, tax what you earn, and tax what you buy. Now, property tax is taxing what you own. Now, in a progressive tax system, you want the people in the economy who have the wealth and the income to pay the taxes, right? And they are the rightful people who should be paying the taxes. Some people have a lot of wealth, but they don't show a lot of income. So property basically is a better way to tax than wealth. Taxing wealth is a terrible thing. That actually, I did a whole program on taxation from the Harvard Kennedy School, and they say very clearly that wealth taxes have only been practiced by very few countries, and that is not the recommended way to do it, because how you're going to calculate wealth, private companies, how you're going to value all these things. Property taxes basically is utilized in many countries, and it is a devolved subject. So it is a good way to link basically the expenditure in a particular locality with the revenue sources. So, for example, the former president, when he was a UDA head, Gota, he did up that whole Independence Square area. But the people who are 2 kilometers radius of that area never paid for that. But they are the people who benefited from that. So the advantage of property taxes is if property values are high and you also take the building value, then they must be able to pay for the services around them that they're benefiting. So there is a direct match between the value of the property and the income derived from that property basically to pay for all the local services, because as I said, that it is a devolved subject. So that is the reason why you need property taxes, and it's the right thing to do. And I again say that for over 100 years, we have had it. Your Colombo municipality or whichever municipality you live, you have a rates and taxes assessment. But the basis of assessment is very, very low. I did the calculation, like the property tax, like less than 0.1% of the value of your property, basically. The US and all, because they pay for the local schools. If it's a residential house, it's like 0.7, 0.8% of the value. And if it's a commercial building, it's like 1.5% of the value. So what was the second part, Oshadi, of the question? One was...
Yeah, I think second part of that was why not increase withholding tax?
Yeah,
Also
withholding tax is what they may be alluding to the interest. So as you know that, 5% you deduct of bank deposits is not deducted from government securities. The question is that should you be making it 10% because your interest income is fully taxable, right? So then the only argument is that then that balance tax is not paid because the owner does not file in their return. But my counter argument to that is there is a gazette out last week or this week saying that the finance companies have to give the entire list of their depositors to the Inland Revenue Department. So even if people are avoiding paying the balance taxes on their interest income, I mean, I don't know what kind of IT systems the Inland Revenue has, but they certainly have the list. So they're going to come after you.
yes. So Mr. Jaffr's second one on taxes is whether the removal of para tariffs will actually happen.
Yeah, it's a good question. Your guess is as good as mine. But I did take this up with Deshal about a month ago. I believe 31st March they would be gazetting somewhere in April. So they were going to do para tariffs over 3 years and PAL over 5 years. So I didn't check in the month of April. The next round was going to happen this month. And then I asked, was it going to be equal? Like, were they said they're going to remove it on the items that have the lowest revenue implications. So I think as long as the IMF program is continuing, they're committed to do that, and it is continuing.
Oshadi, may I just say one thing about this? This is one of the main reasons that we have made no real penetration of regional and global supply chains. Because in the modern production networks, the distinction between exports and imports gets blurred. You bring something in, you do your little bit, and you send it out. Now, if you put a para tariff in the middle, the PALs and cesses, etc., which we've done, you immediately become uncompetitive. So the proportion of our trade, which is part of international supply chains, is negligible. And that has been the most dynamic component of the international trading system for the last 20 odd years. So we have put ourselves out of that whole network.
Yeah, I also want to elaborate where these things came from, right? So CES, most people don't know what CES stands for. It means Commodity Export Subsidy Scheme. How it came from exports to imports, nobody is able to answer. But the reason why these things came is Sri Lanka started signing up for trade agreements. So with India, Pakistan, some other countries. And under those trade agreements, items that are outside the negative list, you can't have any duty, right? So we negotiated in bad faith because we removed the duty, and through the back door, we came and put these para tariffs. So basically, we never benefited from these free trade agreements.
Yes, thanks, Dr. Kumaraswamy and Mr. Jafferji, for your thoughts. Moving on to the next question, I think these two, Mr. Jafferji, would be in the best position to answer. France bailing out Atos, the company that provides cybersecurity for French government institutions, and they've cited US giving billions of dollars in incentives to chip manufacturing. So the question is, don't you see a risk of selling out SLT in terms of national security?
That's an interesting question because I can answer that with some level of conviction. I mean, these arguments have been put in. Where my conviction comes is I looked at the data, right? I remember going to meet the JBP, with the Ceylon Chamber of Commerce. And when this question was asked about SOE, the leader said about, oh, we need a digital economy and I don't think we should sell SLT. Sitting next to me was the CEO of Dialog, basically. And I was just smiling at him because if you look at the market share, basically, the future Airtel Dialog controls 65% market share of the total. And Airtel has about, Hutch has about 8 or 9% of the total. So the SLT is left with about 35%. Now, they're talking about national security. Most government people have Gmail and Yahoo accounts because the government, that email system doesn't work. It's too slow. Even in the SOE restructuring unit, we have an account from that system and the people are complaining that the emails don't come on time. So everybody is using Gmail and Yahoo email addresses, which is on a cloud. Then if they are arguing about national security, including the army commander and the president, and everybody has dialogue phones, basically telephone numbers. They don't have SLT telephone numbers. They don't have Mobitel telephone numbers. And I looked at even the data, right? If you take the data share, because I got the statistics from the Telecom Regulatory Commission, SLT's data share basically of the total is only about like 30% or 35%. A lot of the data is all through the cellular system. So this argument about national security, etc., is a whole bunch of hogwash, basically, because the data does not support it.
Thanks, Mr. Jafferji. Moving on to the next question, is the current exchange rate appreciation due to temporary factors or can it be sustained? Dr. Kumaraswamy, would you like to take that?
You know, when I was in the central bank, my colleagues always told me never talk about the exchange rate. But even now that I've left it, it's probably not wise to talk about it. But let me just tell you what the current exchange rate regime is. Because people keep saying that, you know, the central bank should be doing this and that. Well, you know, as part of the flexible inflation targeting framework that we have for monetary policy, the exchange rate is the first line of defense. It is supposed to be set by market rates, and whatever shock that comes through, the adjustment takes place through the exchange rate. So the central bank does not intervene to actually protect any particular rate. So the underlying demand and supply factors basically determine the exchange rate. One thing one has to qualify, to qualify that is that the central bank is also committed to building reserves under the IMF program. So it does make some purchases from the market, direct purchase from the market, which obviously adds to demand in the market, and therefore it does influence the rate. But that is, the objective is not to protect a particular rate, but to build up reserves. Now, so what you're asking me is whether the demand for and supply of FX is going to, in the future, justify a continued appreciation of the exchange rate, or will it depreciate? When the first thing is, when the economy picks up, imports have to pick up, particularly given the structure of our economy. So you will see, as growth picks up, as confidence goes up, as investment takes place, as growth picks up, and as incomes get higher, and that also would leak into imports. All that, when that dynamic of a higher growth rate comes into play, because we have now achieved equilibrium, a low-level equilibrium. And that equilibrium is based on the growth rate being at the rate it is now. But we want to get to 5-6% and still have an equilibrium. And then we need to see what the demand for imports is and what has happened to our export earnings in terms of inflows and FDI and what have you, the capital flows, etc. So it is extremely difficult to predict exactly what the path is going to be in terms of our import demand, in terms of our export growth, in terms of our FDI inflows and other portfolio inflows. So all that is in the mix. So I think, it is really a guess where the rate is going to go. But given the fact that we have not really transformed our economy yet, I do think that as growth picks up, there will be some pressure in terms of on the demand side for FX. And also remember that we're not servicing our debt, but there we may get a moratorium for a while. But if you take everything together, it's really a guess as to where it's all going to go. But I think if we are able to hit 4 or 5% growth, the rate will probably depreciate rather than appreciate.
Thanks, Dr. Kumaraswamy. So moving on to the next question, it's directed to Mr. Jafferji. Realistically, do you think at least one SOE will be privatized prior to the election time?
Yeah, so just want to make a point that even Sri Lanka Telecom was privatized in 1997. So it's a divestiture, it's a sale of these. I sincerely hope so, because if not, 18 months of my time basically has been wasted. So the D-Day is May, June, July. I mean, after July, then if they gazette and call for the elections, basically, then that's a hard stop. So you have May, June, July to do this. And I sincerely hope that it's going to happen. These transactions are getting nearer and nearer. We are praying that the buyers don't run away, basically. But I'm hoping it will happen.
Thanks, Mr. Jafferji. Next question is directed to Dr. Kumaraswamy. Basically, question goes to say that the Colombo Stock Exchange declined sharply post the external debt restructuring announcement. Do you believe the external debt restructuring negotiations can be concluded prior to June? And in a worst case scenario, if it would not be concluded, what would be the economic circumstances given the election timeline? I think you covered this during the session, but maybe just a quick summary.
Yeah, quick thing is, I think that's no reaction in the CSC. Because as I said, it is, really a little bump rather than a major barrier. So there's another meeting, I think, scheduled between I think Greg put it very nicely. He said all the parties who should have been there were in a single room, and that is a big advance. That happened in London, I think, 10 days ago or so. And hopefully, once the IMF World Bank annual spring meetings are completed, there's to be another meeting, probably before the end of this month. And even Murtaza, who I know is normally a very hard taskmaster and is not going to give an easy pass, did say he thinks that these issues that are outstanding can be resolved. So I don't think we need to even think of it not happening, because I'm convinced, pretty convinced, as convinced as one could be on such matters, that this will take place. It'll be okay. It'll work out. The deal will be done.
Quick comment on that. Look at market prices. Our bonds, the best it traded was 58.59. Just before this call, I checked the prices, Ocean Day, it's 56. The market is guessing that something will be done sooner than later.
Usually a good indication.
Yes, thank you very much. Next question is to Mr. Gregory Smith. So basically, question goes on to ask, everyone talks about India's growth and Sri Lanka being able to ride that growth, but industries in Sri Lanka will have a competitive advantage to take advantage of India's growth.
Yeah, it's a great question. I think the thing on India that amazes me is how big this economy is and how quickly it's moving for the top 0.1% and top 1%. You see industries change over periods of 36 months. You just look at, it's with a country of 1.4 billion people. There's no like pet industry that there exists in Europe or America. Then over the course of 2 years, that industry goes from zero to a multi-billion-dollar industry. So when you've got such a juggernaut moving quickly, you've just got to be 2 years ahead of that demand and be creative with the right products. And you see it in the numbers of how well Sri Lankan diaspora performs in the United States. You give Sri Lankans a chance and they're entrepreneurial. You give Sri Lankan skills a chance and they can create incredible things. So to me, it's not really about like saying that this industry is going to compete with the steel industry in India, but it's just allowing people to be creative and productive. That word productivity came up, and that's central to everything. And that's allowing someone to be thinking about what can I sell, what can I do, rather than how can I get this permit in the next 28 days. And that's what we need entrepreneurs to be doing, not trying to read through 280 pages of employment law and get a permit to put a few computers in an office, but just to give them the chance to sit and think. And I've got full faith they will be creative and that they will be able to provide good services, particularly services into this rapid growth.
May I just reaffirm what Greg said, Oshadi? May I just say something?
Yes, Dr. Kumasan, go ahead.
Yeah, I think it's useful for us to look at what happened in East and Southeast Asia when first Japan and then China had a growth surge. All the countries in the sub-region basically plugged into that growth and benefited. So there's no reason why we can't replicate that, particularly as in the past, it was difficult to have cross-border production networks because the infrastructure in both India and Sri Lanka was so awful. But now we are seeing infrastructure improvement in both countries. Ports, airports, railways, roads, everything are being upgraded in both countries so that transaction costs come down. So, what happened in East and Southeast Asia, there's no reason why it can't be replicated here. And I very much agree with Greg that if we shouldn't take a static picture and look at what there is now and see where there are advantages in terms of penetrating the opportunity that India is giving us. It's a dynamic thing. FDI flows will come and create new opportunities, joint ventures, pure FDI flows, all kinds of stuff can happen. And as he says, the innate creativity of the Sri Lankan people, if it's released, it will make a difference.
Thanks, Dr. Kumasan.
We produce the most unorthodox bowlers in cricket, right? So that's what we're capable of doing.
Yes, that's a good way to think about it. So next question to Mr. Jaffery. Given the external debt restructuring announcements, do you believe local banks have sufficiently provided for its ISB holdings? And in that case, can any write-backs be expected?
So think about it two ways. One is the extent of the restructuring. Second is the exchange rate impact. Now, when most of these adjustments were done, Sri Lankan rupee was 330, 340, 350. Now is 300. So on the exchange rate effect itself, there is room for reversals. The second is the extent of the restructuring. So what you have to do is that you will, accounting rules say that you will take one set of bonds and you will exchange for another set of bonds. So what you'll have to do is that you will have to take the fair value of these bonds. Now, the case for different banks is different, but let me give you a statistic. At the end of 2019, our banks had $1 billion worth of ISPs. At the end of 2020, they had 2 billion. Now, by the time we stopped debt payments, of that 2 billion, I don't know how many matured, because I don't know how many they had in the 2021 bucket. But the point I'm trying to make is the bonds they bought in 2020 were not bought at 100. They were bought in the secondary market at 70, 80, 60, because there were narrow windows that they allowed us. Now, offhand, I can't remember who bought what. So in terms of impairment, basically, you're not impairing from 100. You're sometimes impairing from 80. Like 50% of the bonds, they're impairing at a much lower rate. So if I hazard a guess that if the exchange rate remains at this level, there is an opportunity for them to reverse some of those provisions, but that's more an exchange rate effect.
Thanks, Mr. Jafferji. Moving on to the next question. Which sectors do you think have the greatest potential to help the economy restore growth? Will there be any government policy support to help realize these potentials? Mr. Jafferji, would you like to take that as well?
Yeah. Construction contracted the most, more than 50%. Mining, basically, that supplies sand, concrete, stones, other inputs to the construction industry, lime, etc., followed through. Right. So in the recovery, it is the recovery of the construction industry that will play a big contribution to the recovery, but I don't think it can go back to where it came from. This sector was on fire, basically, and the government does not have the fiscal space to spend anymore. So I don't see the government leading public sector works. You will have to have more private sector, and I don't think the construction sector can come back to where it came from for many years ahead. We have got a huge gift from God. Basically, I always say jokingly that maybe God is a Sri Lankan. The weather has a huge impact on the Sri Lankan economy. We were in El Nino. The Indian Ocean dipole gave us a lot of rain. We are going to have a record harvest. Agriculture is 8%. Agro-processing is another 8%. You're going to have a very strong recovery in that sector. So some of these green shoots, obviously tourism, we had a very good season, but most of the companies were telling me that they have contracted 6 months ago, one year ago at lower rates, and they're expecting significantly improved rates. Of course, a headwind for them is the Sri Lankan rupee has appreciated. So that's about a 10% appreciation, and what they're getting in rupees is going to be 10% less. So they will have to offset that by a 10% increase in tariffs, etc. So in answering your question, I'm expecting a recovery in construction, but not back to where it came from. I'm expecting a recovery in the retail consumption trade because agriculture has been good, tourism has been good, government servants are getting 10,000 rupees more. So generally, the larger brownfield sectors are going to see a recovery. The export sectors are going to be challenged this year because demand is yet weak and the appreciation of the currency is not doing them any favors.
Thanks.
Just to add
Sorry.
two things. One is, I think, the mineral sector. We have graphite, ilmenite, all these things. I've done nothing with it. And graphene is now become such an important, Murtada will know more about it. Murtada, maybe you can talk about it. And, isn't that sector massive potential?
So the one
I
of
know
the
it's utterly corrupt. It's utterly corrupt, the whole thing,
in
but
my
still.
interactions, what these are called, or should they, extractive sectors. Our silly people believe that we are selling national assets by extracting these minerals, basically. But we are doing ourselves a huge disfavor by not stimulating these extractive industries. We have mineral sands, we have some of the best deposits of phosphate, graphite, and graphite we have had for 200 years. The Chinese dominated it, and it's a key component that goes into batteries. Basically, of course, the technology is moving away from graphite. They're trying to use lithium anodes, etc. But whatever we have, because there is no proper law in this country, because the way the law is, if you own a piece of property, what is underneath that property is not yours, right? So this whole mineral, and there was a famous example in Putlam, basically, that there's illuminite. So when Putlam cement takes out the limestone, they can't get the illuminite. They can't extract it. So they have to dump it back into the ground, basically. And this has been discussed. I mean, I've been in so many committees for 10, 15 years. I mean, we don't seem to have a reprieve. And I hope that with this kind of economic transformation law, of course, I didn't see anything on these extractive industries. I do agree with Indrajit that this is a real low-hanging fruit, and we should revise the law.
And also, I think, Murtaza, the shipping and logistics, right? I mean, that's another low-hanging fruit, given the India story and Bangladesh, etc.
Yeah, so but that's on autopilot, no, Indrajit. We went and gave Adani this massive project. I mean, they are constructing at record speed. How much benefit will come to us because we have given them a 25-year tax holiday, etc. But we don't need, I mean, the sector will do well on its own. You don't need a lot of government intervention there.
No.
We don't want them to interfere and mess it up, basically.
No, that should be a growth engine, though. Yeah, it will be.
Thanks for those perspectives. If I may bring Gregory Smith in for the next one. What is your interest rate outlook for this year?
I think, with the inflation base effects gave us a kind of a comfort for the central bank to make another cut. And I think, what do? They went up 1,000 basis points during the crisis. I think they've come down 700. So my best guess is that they stay on hold and they sort of take comfort of inflation oscillating around target, but particularly with the geopolitics we started this call with, and potential increases in oil price and variability in food. It makes sense that they just sort of, I think they can sit back and be data driven for a while, and that's here. And I think that feeds into what's going on globally, whereby I think the US and Canada are going to have to hold back cutting rates vis-a-vis the sort of opinions people held in November, December, given the recent strength of data that side, which impacts on global rates and in turn emerging market rates and currencies and the like. So that's kind of my thoughts. I think they've done a fantastic job at sort of fine-tuning the bringing down of rates. But and just one extra point I think that was made expertly earlier is this magnitude of domestic debt. So I think there's always going to be a floor on the government's cost of short-term borrowing when you've got such a large amount of debt to refinance each year.
Thanks, Gregory. Moving on to the next question. It's on the property taxes, so more of a practicality in terms of implementation. So practically, if there is an old couple living in, say, Colombo 7, with limited cash flows, how will they pay their property taxes?
Is that for me? Yeah.
Yes.
So this old auntie living in Colombo 7 story has been there for a long time. From what I remember seeing some examples, the property taxes, the rate is higher if you have empty land, right? So they are disincentivizing you on sitting on land. Then the rate is a little bit lower if you have investment properties. And if it is a owner-occupied house, then the rate is a lot lower. So the system tries to kind of target people who have large wealth through investments in land rather than an owner-occupied house. So probably this kind of person who is living on their own, etc., will probably have a lower burden. But then they can't give you a complete reprieve that asset-rich people who are cash poor, you're sitting on an asset that has a high value, and if you are unable to pay that minimum maintenance cost to sustain that asset, I'm afraid that the policy will force you to liquidate that asset basically and move on to some more affordable property.
Thanks, Mr. Jafferji. The next question is, why are we projecting lower growth than India? Dr. Kumaraswamy or Mr. Gregory Smith, would you like to take that?
So go ahead, Greg, and I'll have a go after you.
Unmute.
Sorry about that. Just quickly, they got their macro right. We've talked about macro instability being a drag on the Sri Lankan economy. But I think the real incredible thing about this Fed hiking cycle is how robust the Indian economy has been. And that's because over the last 10, 15 years, they've put in a stable macroeconomic framework, and they've avoided some of the policy blunders that goes with that. And I think where the roots of that was back in 91, when they didn't default, but they had a huge crisis. They were deeply ashamed. They had to go begging to the Bank of England to move some gold bars in their favor so that they could pay for basic imports. And what was decided in India in the early 90s was that we can't do that again. We can't be in crisis. We can't get near to default. And we need our macro stability to be sacrosanct. So I see that macro stability that has been talked about during this webinar as crucial to underpinning growth. It kind of gives you a chance to do the productivity things, to build the growth. But if you let the macro go, things fall apart. So why is India growing faster than Sri Lanka? Because India has avoided crisis and macro instability.
Thank you very much. That is such music to my ears. And gives me a chance to share one of my favorite anecdotes. Really, India since 91 has never gone back to the IMF, as Greg has pointed out. We've since 91, probably more than half our 17 programs were probably after 91. India was able to actually achieve a consensus on its macroeconomic policies at that time in 91. We, as I spoke about earlier, keep reversing, have all kinds of policy reversals, slippages, etc. I was told when the IMF program was worked out, Manmohan Singh, who was then the finance minister, took the program to Narasimha Rao, who was prime minister, and said, Prime Minister, this is a very, very harsh program. You're going to have great difficulty in selling it to your own cabinet, leave alone the country at large. So Narasimha Rao had said, give me 15, 20 minutes, and I will come back to you. So before 15, 20 minutes passed, Narasimha Rao came back to Manmohan Singh, who was the finance minister, and said, okay, go ahead. So Dr. Singh said, look, how have you managed to do this? How can you consult your cabinet in such a short time? He said, I do not need to consult my cabinet. I gave just one call. It was to Mr. Vajpayee, the leader of the opposition. I told him the situation, and he said, if it has to be done for India, go ahead and do it. We might criticize you in Parliament, but you go ahead and do it. We won't block you. And that was a consensus that was reached through just one call between the Prime Minister and the leader of the opposition, which has helped them to achieve the scenario that Greg has spelled out so clearly and well. So we do not have a consensus. We keep doing these policy reversals. Hopefully now that we have got these frameworks and embedded in the law, we can finally have some kind of consensus, which will give us the kind of platform Greg has talked about to launch a totally new chapter. We have to change our deeply flawed growth model from depending on non-tradables to tradables. And for that, you need a stable macro platform. Thank you.
Thanks, Dr. Kumaraswamy. Just one more question just came in right now. Why is there a taboo on proposing drastic cuts in state employment and recurring non-financial expenditure in general? Mr. Jafferji, would you like to raise it?
Yeah. See, you know, it's very tough to cut expenditure. Let's see where these state sector employees are. You have this whole entire defense establishment, police, 400,000 people, right? So you have 82,000 people. The last time I counted in the police, there was almost 200,000 people in the army. That has now reduced because there is attrition. I'm told only 1/3 of the people in the army are fighters. The rest are all support, right? Then you have a Navy, which is 50,000, Air Force, 20,000. So Home Guards, all the civil defense force, 30,000, 40,000. You put all that, you get 400,000. There are 220,000 teachers in Sri Lanka because there are 4.3 or 4.4 million school students, 18:1 ratio. You have 150,000 people in the healthcare sector. Then you have a whole bunch of people basically in the administrative system, central government, provincial councils, local governments, etc. So the way you can look at it is if you take a labor force as being 8.5 million, it's about 14 to 15% of our labor force. If you take the number of civil servants relative to the population, we get a very high ratio, right? So there has to be a significant improvement, but it has to come, like, for example, you can demobilize the military overnight. And I think this president has got an agreement with the service commanders that by 2030, there will be a significant reduction through attrition. So it's very tough overnight to try to reduce the expenditure. The non-labor expenditure, remember that the three main items are interest, a staggering 2.8 trillion, wages over 1 trillion, pensions 400 billion. So you add these three, you will already get about 80 to 90% of total government expenditure. Then you have capital expenditure, which has been reduced to something like 2% of GDP. And what you can call purely discretionary items are very, very low. Because when we first started in this SOE restructuring, there was a circular saying that if a meeting is like 1 or 2 hours, only plain tea. So I used to take a milk carton and go because I don't like that too bitter tea. I used to take some of our tea because we are a tea company basically. But okay, those are all about optics basically. But you know, where the big elephant is, you know, the big expenditure is interest and salary. You can't do much about it, and that is why the IMF said that this is revenue-based consolidation because 8-9% of GDP is ridiculously low. Even 14% is very low. I mean, I think Greg was making a presentation somewhere else, and he was saying that you must at least get 20%. I agree, but at least 14% is easily achievable.
And you know, actually, if I may, up till the mid-90s, Sri Lanka collected 20% or more by way of revenue. But what happened is at that time, a big component of the revenue came from the tree crop sector, tea, rubber, and coconut. But clearly for various reasons, in terms of trade, the nationalization, all kinds of things, that the surplus in that sector came down and the taxes were reduced. But then the new sectors, the sectors which then were the growth sectors, didn't pay any tax because they were given tax holidays. So that's what happened. The old sectors, which were the main sources of tax, kind of matured and faded away for various reasons. And the new sectors were not paying any tax. Apparel, tourism, of course, have had their ups and downs, but when they were making money, they were not paying tax. IT, all these new sectors haven't been paying tax. So that's why we're in this mess, because we used to collect 20% or more right up to about 1995 or 96. And one other point, if I may, you know, the overstaffing in the public service came about after the 71 insurrection. If you remember correctly, the analysis of the insurrection, of the causes of the insurrection, people said this was a mismatch between opportunities and expectations, aspirations particularly for educated young people. So from that time on, politically, it was considered a must to provide employment for graduates. So whatever the circumstances, somehow they were put into the public service in various ways. And the fact that we had a very large public
add one more thing. In 2005, when the MR came into power, I looked at the Ministry of Finance annual report. The card, there's a chapter on card, 650,000 people.
Yes, yes.
By the time 2015 came, it was 1.1 million.
It doubled, yeah. No, it doubled. From 2005 onwards, it doubled. Of course, even if you allow a couple of 100,000 for the military, even after that, it was we've had all these things like MPs, chits, job banks, all kinds of stuff to institutionalize this overstaffing of the public sector.
Thanks, Dr. Kumaraswamy and Mr. Jafferji, for your thoughts there. I think we've come to the end of the Q&A session. We've gone through all the questions on the Q&A tab. So basically, I think it's now time to wind up the webinar. So would like to thank all our panelists, Dr. Indra Kumaraswamy, Mr. Murtaza Jafferji, and Mr. Gregory Smith, for taking your time of your busy schedules to be on our webinar today. I think you all provided very valuable insights, and I'm sure our clients would have taken away a lot of new perspectives in terms of the macro plus recent developments in terms of the debt restructuring. Also, a big thank you to all of our clients who've joined us today on the webinar. So yeah, thank you all for joining. Have a pleasant evening.
Thank you very much. Thank you, Oshadi.